So let's say savings account in Dubai. If we open a savings account in Dubai, most of the time we either get 0% or maybe 1.5%. So that's like the average annual return. Maybe a long-term debt like FD, or a sukuk or national bonds, etc., might give you something between 2 to 4%. Dubai real estate is very cyclical, but average 10-year annual return is somewhere between 7 to 10%. Gold. So the first three are more dependent, but now as we go down, it is more certain because it is based on data which is reported. So gold, 24 karat gold, has given about 12% return. S&P 500 has given 30% return. S&P 500 is an index of the top 500 companies in the US. I've taken India equity. I've just taken one mutual fund which has been around for 20 plus years, HDFC FlexiCap Fund, which has given 13.5%. Nasdaq 100, which is another US equity, which is more focused on technology companies, has given about 17%. So the point really is some asset classes, and we saw in the previous chart inflation, many of our purchasing power. Inflation, reported inflation in Dubai is about 3.5%. But actually, on the ground, when you look at lifestyle upgrades, etc., the real inflation that most people will feel will be in the range of 7%. The so-called safe assets that many of us tend towards, which is keeping money in the bank or keeping money with bonds, do not beat inflation in the long run. Actually, investing in these kind of funds is destroying your purchasing power. But the real asset class, which actually gives growth in the portfolio, is equities, because these are investments in businesses, and businesses exist to make profit. And businesses will always try to maximize shareholder return, and therefore they will grow over and above inflation, especially with innovation in the economy and so on.